Hi guys, welcome back to TipRanks. My name is Annika and here at TipRanks we love to hear what you guys think of different stocks you're looking at and your opinions on the market sentiment. Well, we've got a very important earnings coming out today, and that is Apple's Q1 2022 results. The conference call with the earnings goes live at 2 p.m. Pacific time and 5 p.m. Eastern time. So let's take a look at expectations on what we're to look out for when the results come out. Before we jump into this video, guys, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when the TipRanks channel releases a video. Apple in the past fiscal year has shown a dramatic increase in earnings, in revenues, and in sales of iPhones, its flagship product. This growth came from a global supply shortage that did hurt Apple's production capacity during the pandemic. But signs have emerged that growth has been slowing, and Apple told their component suppliers that the demand for iPhone 13 has weakened. In fact, Apple has cut iPhone 13 production goals by as much as 10 million units. So investors are probably wondering, how will this impact the earnings report of Q1 2022? Well, the current price for Apple is $159.69. The analyst rating consensus is very positive and it's deemed a strong buy based on 22 buy ratings, 4 hold ratings and 1 sell. The analyst price target on Apple is $181.40, which is a 13.60% upside based on 27 Wall Street analysts offering 12-month price targets for Apple. Analysts expect that the company will report year-over-year growth in both earnings per share and revenue. However, they are predicted to grow at slower rates than the previous 4 quarters. Investors will likely focus on Apple's key metric of iPhone revenue. The iPhone is Apple's most popular product, and after they had torrid sales in each quarter of fiscal year of 2021, analysts actually expect that iPhone revenue growth will drastically decelerate in the first quarter of 2022. Apple stock has generally underperformed the broader market. Apple shares fell below the market in January 2021, and it's continued to lag for most of the year. The stock did begin a sustained rally in October 2021, and it closed the performance gap and eventually outperformed the S&P 500 in December. However, in January 2022, Apple shares have tumbled alongside the broader market. However, we've seen this across the board in a lot of tech stocks. So as of January 25th, Apple provided a 1-year trailing total returns of 12.5%. just behind the S&P 500's total returns of 13%. Apple has actually been one of those rare companies that has avoided consistent declines in EPS during the pandemic. The company had posted its year-over-year EPS declines in just 3 of the past 15 quarters, Q2 and Q3 of 2019 and Q4 of 2020. The company had posted year-over-year EPS declines in just 3 of the past 15 quarters, so Q2 and Q3 of fiscal year 2019 and Q4 of fiscal year 2020. Otherwise, Apple EPS has consistently grown year-over-year, although it has ranged drastically from 3.8% in Q2 of 2020 up to 118.6% for Q2 of 2021. The 3 most recent quarterly periods have seen the most dramatic EPS growth in nearly 4 years. Analysts are predicting that for Q1 2022, EPS growth will slow to 11.9% year-over-year, which is only a third of the growth rate in the same quarter a year earlier. It's also a fraction of the pace of growth in the most recent reported quarters. The key metric that investors are going to look out for is Apple's iPhone revenues. iPhone sales are a substantial portion of Apple's revenue and historically have accounted for about half or more of the company's annual revenue. Apple's coming report today for Q1 2022 includes the November and December holiday sales periods. Apple's iPhone sales have actually usually benefited from strong general retail industry environment. During 2021, during holiday shopping season, retail industry sales were up more than 14% year-over-year to a record $886.7 billion. And this was according to the National Retail Federation. So they've shown a positive revenue stance despite the inflation, supply chain issues, and the pandemic itself. In addition to positive support, American TV personality Jim Cramer argues that Apple is a defensive stock given the high inflation and interest rates. His point was that when it comes to big tech companies, for example Facebook, Google, he pointed out that they've been trading at ex-cash earnings multiples of less than 20 times, and this compares to Clorox's 31 times, which is much more aggressive. He goes, while the latter may be thought of as a defensive play, the tech stocks may look much more so from a valuation perspective. He described Clorox as a miss quarter company, while Apple was a make quarter one instead. So perhaps because of this consistent performance that we've seen with Apple, it could be considered a defensive play. Taking a look at the website traffic chart on TipRanks, we can see the sort of demand that is taking place on Apple's website. The monthly growth in December 2021 was actually down 17.95% compared to the previous year of December 2020. And when we look at quarter-to-date growth on Q1 2022, so between October and December, it's been down 17.75% compared to Q1 of 2021. However, it's important to note that the year-to-date growth in website traffic was up 10.73%. So guys, those are the main points to bear in mind before the earnings call today. Let me know what you think in the comments below. If you want an updated video on bullish fundamental news on Apple, let me know that as well. And if you guys made it this far, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when the TipRanks channel releases a video. Remember, this is not financial advice. Make sure you do your own research before you invest in anything. I'll see you guys in the next video. Bye!